Stop what you're doing for a second, because the way most people are reading this Iran deadlock is way too shallow for what it could mean underneath the silver market. If you're just watching spot price and headline scrolling, you are probably missing the part that actually matters. Because silver is not only reacting to whether a deal gets signed, it is reacting to what this delay is doing to supply pressure, delivery expectations, paper positioning, and the confidence people have in what comes next. And if that sounds like a lot, good. It is supposed to, because this setup is a lot bigger than one diplomatic headline. This is Bullion I, and today I want to walk you through why this Iran deadlock is quietly tightening the silver market, why the most important shift here is not loud but structural, what the paper market may be misreading, and why silver holders need to pay attention before the crowd finally catches on and starts acting surprised after the move is already underway. Quick question before we get into it. Drop the silver price on your screen right now in the comments, just the number. Then tell me your instrument in one word: physical, PSLV, SLV, miners, options, or watching. Keep it simple. I want to know where this Bullion I community is sitting, because in a market like this, positioning matters more than opinions. Now let me say this as cleanly as I can. A deadlock is not the same thing as a collapse. That is the first mistake people make. They hear that negotiations stalled, or that tougher terms came back, or that the timeline stretched again. They instantly pick a side. Either they say the deal is dead and metals have to rip, or they say the market will calm down and silver has to roll over. Both takes are lazy. The real issue is not whether the deadlock feels bullish or bearish in the abstract. The real issue is what the deadlock is doing to the physical and paper structure of silver while the crowd argues over headlines. Because silver is one of those markets where the visible story and the real story can move in two different directions for a while. The visible story is the headline. The real story is the mechanism under the headline. And when those two stories split apart, that is when silver gets dangerous, volatile, and honestly kind of disrespectful to anyone trading it with weak conviction. So what is the visible story right now? The visible story says the Iran deal is delayed, the timeline is uncertain, and the market has to reprice what looked easier a few sessions ago. That part is obvious. But the deeper story is this. Every extra day of deadlock means every part of the market that was hoping for a clean reopening, cleaner shipping assumptions, easier energy expectations, and smoother supply normalization now has to sit in uncertainty longer. And uncertainty is not neutral in silver. It changes behavior. That is the whole ballgame. Because silver does not just move on official outcomes. It moves on what traders, holders, industrial users, and allocators think the path is going to look like before the outcome gets confirmed. If the path gets longer, if the process gets uglier, if confidence gets shakier, and if physical urgency stays alive, while the paper side keeps pretending the problem is temporary, then yes, the deadlock can quietly tighten the market even if the chart does not scream it yet. Now slow that down with me. When a geopolitical process stalls, there are usually two reactions. The first reaction is the emotional one. People chase a simple narrative. Risk up, risk off, deal on, deal dead, safe haven bullish, growth bearish. That is the fast money read. The second reaction is the structural one. People start asking what stays unresolved while everybody else is busy reacting. Does energy pressure remain sticky? Do supply chains stay awkward? Do industrial buyers keep acting defensively? Does paper silver price in relief too early? That second layer matters more than the first when you are dealing with a market like silver. And that is exactly why I think this deadlock matters more than a lot of people realize. Not because it guarantees a breakout tomorrow morning, not because it means every silver bull gets to chest bump and victory lap, but because it extends the period where physical pressure can remain important while paper confidence stays vulnerable. That is how tight setups build, quietly at first, then all at once. Before we go deeper, hit the like button if you want Bullion I to keep breaking this market down in plain English. No fake guru nonsense, no comic book silver prophecy, no recycled drama. Just the real setup, the real pressure points, and the real market behavior that matters. Now here is what I think most people are missing. The silver market does not need a perfect crisis to get tight. It just needs enough uncertainty to keep real demand cautious, enough narrative confusion to keep paper traders off balance, and enough structural pressure underneath to make the wrong side of the market uncomfortable. That is the setup where silver starts acting weird. And silver acting weird is usually the part that matters before silver starts acting explosive. So when I say the deadlock is quietly tightening the silver market, I mean three things. First, it keeps timing uncertain. Markets love pretending they can price the future cleanly. Deadlocks mess that up. They stretch the window where no one is fully comfortable assuming normalization is around the corner. Second, it keeps physical demand behavior honest. If users, buyers, or larger players are still not comfortable trusting the next few weeks to calm down, they do not behave like everything is fixed. They stay defensive. They stay engaged. They stay interested in actual access to metal. Third, it keeps paper silver vulnerable to mispricing. Because if the paper market starts leaning on optimism too soon while the real world structure is still tight, the gap between those two conditions can become the next trade. That is why this matters. Now, let me talk directly to the different people watching this. If you hold physical silver, your edge is not speed. Your edge is patience, position, and not getting baited out by every emotional paper move. For you, the question is not whether one headline sounds scary. The question is whether the broader reasons for holding silver are getting weaker, or whether this deadlock is actually extending the kind of uncertainty that keeps physical metal relevant. Those are two different things. If you hold PSLV or SLV, the market gets more tactical, because those vehicles can move hard when the market reprices scarcity, sentiment, or macro stress. If deadlock keeps physical pressure alive while paper traders are still leaning on a cleaner outcome, that can create sharp repositioning. But if the market starts seeing the deadlock as temporary theater and the dollar stays firm, the ride gets bumpier. That is why you need to know whether you are in for structure, momentum, or both. If you trade miners, this gets even more emotional. Miners are not just silver. They are silver plus narrative plus volatility plus risk appetite. When silver tightens quietly, miners can lag, then suddenly wake up. But if the market is still unsure, they can also get chopped to pieces. So do not treat miners like a simple silver proxy. In this kind of setup, they are leveraged psychology. And if you are watching COMEX because you know the paper market can bully price until the physical side starts pushing back, then this is your lane. Watch what the market absorbs. Watch what refuses to break. Watch whether weakness really behaves like weakness, or whether it gets bought faster than it should. That is where silver usually starts leaking the truth before the headlines admit it. Now, let me give you the part that separates the shallow read from the serious one. A deadlock does not tighten silver because deadlock sounds dramatic. It tightens silver if it prolongs the exact conditions that keep the physical side of the market defensive and the paper side uncertain. That means if shipping expectations stay shaky, if energy assumptions remain unstable, if industrial planning stays cautious, and if actual buyers still want metal in hand rather than headline comfort, then the deadlock is not just background noise. It becomes part of the structure. That is the key phrase here, part of the structure. Because once uncertainty becomes structural instead of just emotional, silver stops behaving like a simple news trade. It starts behaving like a compression trade. It starts storing tension, and compression is usually where some of the nastiest silver moves come from. Now here's the part most casual viewers miss. Tightening does not always look bullish at first. Sometimes it looks messy, sometimes it looks choppy, sometimes it looks like a market that cannot decide whether it wants to break up or get smacked lower. That is exactly why silver traps so many people. They want clarity before they want structure, but silver usually gives you structure first and clarity later. And that is why a deadlock can be bullish for silver in the deeper sense while still creating ugly short-term swings. If the market is trying to price relief while reality keeps delaying relief, then every sharp move has to be read carefully. Not all green candles mean strength. Not all red candles mean weakness. What matters is whether the structure underneath is getting looser or tighter while everybody else is reacting to noise. So what am I watching right now? I'm watching 5 things. Number 1, I am watching the dollar. If the deadlock drags out, but the dollar loses momentum anyway, that tells you the market is not buying the most aggressive, hawkish interpretation of the macro setup. Number 2, I am watching silver around obvious support and resistance. Not fantasy levels, real levels that everybody sees. If silver keeps finding buyers after fear spikes, that matters. Number 3, I'm watching the gold-silver relationship. Gold often shows you whether fear is still in the room. Silver shows you how much torque the market is willing to accept. If gold stays solid and silver starts catching up, that can get interesting fast. Number 4, I am watching physical demand behavior. If paper silver gets shaky, but real-world buying interest stays sticky, that matters a lot more than a loud social media thread. Number 5, I'm watching COMEX structure itself. Delivery behavior, positioning, and how the market reacts to tightness matter more than the headline circus. And let me add one more thing, because this matters. The strongest silver analysis does not just tell you what happened. It tells you what to watch next without turning the whole thing into a cartoon. That is what I am trying to do here. I'm not telling you this deadlock guarantees an instant squeeze. I'm telling you it is extending a setup where the silver market can get tighter than the headline read suggests. Now, there is another layer here that a lot of channels either skip or butcher. The market does not just react to facts. It reacts to how long uncertainty survives after the facts should have cleared things up. That is a huge deal in silver. If a deal looked close and then the process gets stuck, the market starts asking whether the timeline was ever as clean as it looked. Then it starts questioning every assumption built on that clean timeline. That includes shipping assumptions, inflation assumptions, and timing assumptions for physical normalization. Once timing gets questioned, silver gets tricky. Because silver hates fake certainty. It punishes the people who front-run relief too early, and it punishes the people who short fear too aggressively if the structure underneath is still tight. That is why I keep coming back to the same point. The deadlock itself is not the trade. The effect of the deadlock on behavior is the trade. If buyers stay engaged, if physical interest stays alive, if the market refuses to break the way it should, and if paper optimism keeps colliding with real-world delay, then silver is not calming down. It is coiling. And coiled silver is one of the few things in this market that can go from boring to violent without asking anyone for permission first. And once silver starts tightening under the hood, while the crowd is still debating the wrong story, that is when the move usually stops being polite. One last thing before I close this down. Deadlock usually feels boring right before it becomes expensive. People get tired of the same story, tired of the same headlines, tired of waiting for resolution. And that is exactly when they start making sloppy assumptions. They assume pressure faded because the drama got repetitive. They assume the market adjusted because the first panic did not become a full-blown crisis. But silver does not care if people are bored. If the structure stays tight, boredom can be the mask the next move wears before it finally shows up and catch lazy traders completely off guard in the worst possible moment for them in silver markets. So here's the bottom line. The Iran deadlock is not just a geopolitical sideshow. It is quietly tightening the silver market because it extends uncertainty, keeps physical urgency relevant, and leaves the paper side vulnerable to pricing the wrong outcome too early. Do not just watch the headline. Watch what stays unresolved. Do not just watch the candle. Watch what gets absorbed. Do not just watch the paper move. Watch the physical behavior. Do not confuse delay with nothing happening. And do not assume silver has to announce its next real move before it starts building it. Drop the silver price on your screen in the comments right now. Then one word only: tighter, weaker, or waiting. I want to know how you read this setup before the next move. Subscribe, stay sharp, and keep your eyes on the structure, not just the story. This is Bullion Eye. Real silver talk, no fluff, no fairy dust. I will see you before the next move.